and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues on the day street, the way the benchmark indices are really moving in trade, the sectoral moves as well as all the stocks that are buzzing in trade today. We will get you expert views on all of these and also an update on the Adani Group of stocks that we always help you with. But first up, a quick check on how the markets are doing at this point in time. Of course, there's an overhang of the Silicon Valley Bank crisis that we saw spilling over from yesterday. The markets had slipped about 1,000 points intraday yesterday, and the markets extended their fall in the first half of the trading session today. But right now, as we speak, the markets are inching towards in the green zone, right above the flat line, 17,165 for the Nifty right now. And the Sensex is hovering at 58,306. Obviously, when you see in the first half of trading session, we'd also see the Sensex slipping below that 58,000 mark. There's been a bounce from those days low levels, but we'll have to see whether the bounce really sustains going forward from here. In terms of the other sectoral moves, in terms of the sectoral indices, we are seeing most of the sectors now inch towards in the green, with the banks really turning positive, about 0.25% higher for the Nifty Bank today. Of course, leading towards that recovery is the private banks with a 0.2% of an uptick. The PSU banks are still down in the red, 0.8%. So that remains as a pressure point. The IT stocks are down in trade today, almost 0.8%, 0.5% cut for the realty pack as well. Apart from that, it's the metals that are losing their sheen as well today. But the rest of the sectors still look, in the green, although just tad a bit above the flat line right now. The market breadth looks divided with a slight tilt towards the bulls. 28 stocks in the green, 22 stocks in the red as far as the Nifty 50 stocks are concerned. In terms of the gainers today, you have stocks like BPCL, Tata Steel, Titan, IndusInd Bank and L&T all up by 1 or 1.5% odd. On the downside, you have the Adani Group of stocks that have been tanking almost 5-7% in the initial half of the trading action, and even now, Adani Enterprises down by 7%, Adani Ports down by 3%, Tech Mahindra, HCL Tech and M&M. These are the counters that are dragging the overall index moves. Let's get our guest in for the expert take. Mr. Abhishek Basumallick joins in. He's the founder of Intelsense Capital. He joins in. Mr. Basumallick, good morning and thank you so much for taking the time out for this discussion. Well, first up, I wanted to understand from you, how did you overall analyze the SVB crisis and the US financial system and the ripple effect that we saw across the world yesterday and in the first half of trading session today? Is that going to be an overhang for some more time to come in the markets?
First of all, good afternoon. And see, these are very difficult things to judge because, first of all, whenever you're looking at banking numbers, the assets, liabilities, etc., very, very opaque, right? And that is one of the reasons why we see trouble in banks keep recurring over, every few years across the world. One of the main reasons is it's not as easy to understand what is there in terms of quality of the book of a bank. Now, if I look at, the Silicon Valley Bank and what implications it's had, I think there's been a lot of noise or a lot of talk around this. And net, I think, my takeaway has been that it's a smallish bank with limited reach and limited implications even in the US. So there is probably no imminent threat just for the, from that bank. But the issue in the US right now is because they've raised rates so quickly in such a short period of time, roughly from 1% to 5%, that's, taking rates 5 times higher in a span of, say, 6 months or about a year. So that becomes a major problem, right? When you do something so drastic, especially when rates have been near zero for so long. So something, there are possibilities of things, breaking in the system. And now we are seeing that, come to the fore. Whether this will spread amongst other small banks and people will panic and take money out and put it in the larger, too big to fail kind of banks, that is what I think is what needs to be, sort of looked at. And I think the uncertainty that people have or investors have around the world is essentially around that.
But what would you see as an impact on the Indian banking space? We saw most of the banks really come under pressure in yesterday's trade, some of them down even today as well. This sector had just about started to recover after the COVID-19 during that time underperformance that we had seen from the banking space. Your thoughts on the financial services sector here, including both the private banks, PSU banks as well?
See, honestly speaking, I don't see any correlation between Silicon Valley Bank or the small banks in the US with the Indian banks. I mean, completely different. There's no linkages, etc., etc. So there's no reason to sort of think that any problem, unless that this problem sort of balloons up and becomes much more bigger. Uh, I don't see a problem with the Indian banking system. Now, the challenge here is I don't think, again, the fall that we've seen has too much to do with the US SVB. I think it's more that we've been seeing all around. I mean, last 2 months we've seen this. For one reason or the other, markets go up for 2-3 days and then fall for the next 4-5-7 days. And if you see today, what is happening is in the intraday we are seeing a bounce back, and I'll not be surprised if by the end of the day maybe the market can even close higher. I mean, who knows, right? So that's been the nature of our market for the last few months, and people are looking for reasons to sell, and it's sort of a range bound trading kind of a market. So very difficult to ascribe reasons for what's happening to anything, any particular news item.
Okay. And what about the other asset classes? We saw the crypto space, dollar, gold, all reacting to the SVB collapse as well. Particularly for Indian investors, should one look at gold as a safe haven amid the uncertainties and the volatility we are witnessing in the markets overall?
In fact, interesting that you asked this question. I track commodities, especially the metals, pretty closely. And yesterday I was seeing that not only gold, I mean, gold was up, I think, about 2%. Silver was up 5% yesterday. And pretty much, I mean, zinc, copper, aluminum, you name it, everything was up yesterday because uh, I think people were sort of fleeing the equity markets and, looking for stability in real assets. Uh, Having said that, I mean, for me as a long-term investor, I don't like gold or any of these metals per se, simply because they are not cash flow generating assets.
Okay.
But as something that as a hedge, maybe a gold or a silver could be looked at for the next few months.
Okay, and in what form would you really recommend investors to have this? We did see, the sovereign gold bond option open recently for investors. There's a lot of digital gold, mutual funds, ETFs now as an options available for investors as well. But mostly it is bought in the physical form. What is the best way that you advise investors to go for gold?
See, I've always sort of thought that if you have to buy gold as an investment, it's best to, buy the sovereign gold bonds or buy it through mutual funds or ETFs. Physical gold is too much of an hassle. And the other problem, from a pure realistic standpoint, is what I have observed is once you buy physical gold, then there's a lot of sentiment attached to it, and then people, from your family will not let you sell it.
Sure.
And that is the reality of our Indian mindset, that once you buy gold, you'll not sort of sell it unless there's a problem. And then it doesn't remain an investment. It's sort of, then you're holding that for probably the next generation, or probably I don't know what happens to it afterwards. But if you want to look at it as a short term, medium term play, in better to go in for the electronic form.
Okay. And, overall for equity investors, what is the message for investors out there? I mean, are these dips, should they be looked at as an opportunity to buy into some of the key sectors or stocks which are looking attractive at these levels? What should they do? And what about the short-term investors? Should they really wait for the dust to settle down before entering in?
Yeah, for the short-term investors, I would say, it's either you can play those short, small jumps, and if you are a day trader or a swing trader, you could do that. But if you're an investor, I think these are good times to slowly do your stock picking. You identify your 8, 10, 12, 15 stocks, and sort of keep doing a sip on those days when markets are down. So, for example, yesterday, maybe part of today, you add incrementally a little bit from the planned amounts, and keep doing that on every fall for the next 1-2 months.
Okay. And where exactly do you spot these opportunities amid these dips? Are there any key sectors that are on top of your radar right now?
Yeah, I think we've already spoken about that. Every time I speak, I think I say the same things. It's capital goods, it's engineering, it's stocks related to auto sector. Even pharma, I think, is slowly, especially domestic facing pharma is looking interesting. Uh, Mid cap IT, not the IT, core IT services, but niche IT players. Those are areas which I think definitely look interesting. Uh, Even banks, NBFCs, MFIs, if you can pick them, some of them, you make a basket of
Sure.
12 to 15 stocks, and then keep adding incrementally over a period of time. I forgot
Okay.
defense. Defense is again a very, very interesting play for the next 3-4 years, I hope.
Okay, okay, understood that. But is there also a space that you would steer clear of right now, not sell, but perhaps avoid?
uh See, there are froth happening in pockets, especially, the nature of the market now is that it's picking up, some sectors, and then a lot of money is chasing that, and then it's keeping on rotating every couple of months. So I think a lot of uh, f- I will not call froth, but there's a lot of valuation, overvaluation, etc. In some of the FMCG pockets, in consumer names.
Sure.
Maybe I would sort of stay a little bit away from them. But in general, I think markets have now are in a stage where, in my opinion, you will be better served if you keep buying in slow increments over the
Sure.
next 2-3 months, 4 months, for the next 2-3 years.
Okay, understood that. You know, the pocket that we always discuss also is the Adani Group of stocks, because every day there is some kind of a momentum. Yesterday, most of these stocks were up almost 9-10 odd % as well. Today, these stocks have tanked up to 7%. Most of the stocks are deep in the red as well. What's really happening here? We've been looking at the constant efforts by the management to really regain investors' confidence, prepaying of the loans to, look at the cash flow situation and prudently looking at the financial situation as well, and not go on an expansion spree, but look at perhaps repaying some of the debt to contain those situations as well. Help me understand your view. Has anything changed over the course of the days when we have seen some steps by the management?
Yeah, I think, in the Adani group of stocks, what is really good to see is that the management is taking active efforts in repaying the loans, in sort of bringing down debt levels, etc. So that is a welcome sign. The problem, in my opinion, was never, uh, you know, the cash flow situation. The problem was always with the valuation. Valuation continues to be very rich, in my opinion, simply because uh, now, with constraints of or constraints of getting more debt, etc., you will find that growth will definitely take a hit. The plans will have to be sort of postponed or take paused in terms of capex, in terms of growth. So if you sort of reduce the growth rate from what it was to maybe even half or one third of that, valuations need to sort of then uh, adjust to that. And I don't think that adjustment process has completed. It will take some more time.
Yeah.
And another thing that is more slightly technical in nature is, once a stock falls so much, it will need to form a base. It will need to, sort of consolidate for a while, for people to get a feeling that, okay, this is not falling off the cliff any further, right? For then people to start taking a serious sort of
Sure.
notice. Right now, I don't think that bottom formation has happened.
Sure, sure. Okay, understood that. Well, thank you so much, Mr. Basumallick, for being with us on the show and discussing these various sectors and your insights on various pockets that we've discussed today. Markets are slipping away once again, 200 points down for the Sensex. So it's very, very volatile market that you can really spot. Again, the Nifty is hovering 70 points lower at 17,080, 81 points or so. So again, you know, a lot of volatility, 0.4% of a decline again. The markets had turned flat absolutely just a few minutes ago as well. So you can see that volatility really playing out. We'll have to keep an eye out on as to what the markets have in store as far as the last 2.5 hours of trade is concerned. So do stay tuned with us on Business Today TV to catch all the updates from the world of business and stock market. You can continue to engage with us on our social media platforms, that's Facebook, Twitter, LinkedIn and Instagram as well. Until then, many thanks for joining in.
The collapse of Silicon Valley Bank in California could hit 800 employees working at its Bengaluru office. Though no official announcement has been made, employees are fearing the worst. Let's go across to Akanksha Chaturvedi for more on this. Akanksha, what are the possible scenarios which would play out here for these employees?